Hello, I've returned with another ADH Wealth solution. Today, we will begin to discuss fulfilling all of your financial needs. As always, this is a basic description. For an evaluation of your own, please schedule an appointment. My information is in the description. Lastly, make sure you hit the like, drop a comment, and if you're new, subscribe and hit the notification bell so you're made aware every time I release new content. Yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And today, I'm going to whap and tap on your head a little bit of information from my personal Facebook group. Well, a personal Facebook group. So if you'll notice here, I belong to a group called Professional Life Insurance Agent Discussion. And what I did here was I posted my blog post about term versus whole life insurance and what's the big difference. A real review by Alonzo Hall, the licensed financial professional. Right? And the reason that I'm posting this is, number one, I'm going to read the blog to you. But number two, I like the reactions that were had here because it's other insurance agents chiming in. And you get to see an unbiased opinion of iron sharpening iron. Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, you can contribute to channel growth by hitting the Cash App. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. So let's read the blog first. As a licensed financial professional, it's one of the most commonly asked questions next to what's better to have, whole life or term, and how much does the average insurance policy cost? Although it may seem like they should be easily answered and straightforward, it's not as simple as it seems. Of those questions, however, the only one that has a definite answer is which is best to have. And the answer to that is simply having a policy that's in force at the time of need. Now, the major difference between term and whole life is how it's treated after certain inflection points. Mainly term, as it ends once the term ends. There's also a hybrid type of life insurance that blends both whole life and term life insurance in the same policy. There's something called term to permanent or juvenile life insurance, which most people are familiar with things like the Gerber Grow Up Plan or Aflac. These policies generally are on children and are term until the child reaches the age of majority, which is 18 in most states, where they can either take over the payments and increase the coverage with no medical qualification and making it a whole life cash value accumulating policy. After that, it really depends on what purpose you want your policy to serve. Most people have no clue that a life insurance policy can serve many purposes outside of just giving somebody a big check when you die. That in itself is often a big turnoff for most people when it comes to life insurance in general. Many salespeople will tell you many different concepts like buy term and invest the rest, or take advantage of the infinite banking concept. Concepts which, if utilized properly in a solid financial plan, are great for the individual situation. But before you can take action, it's best to know the simplest form of the two main types of life insurance: whole life insurance and term life insurance. Now here we're going to dive a little bit deeper into what term and whole life insurance is, some features and benefits so you can make an educated decision while setting up what I call your CSI plan. That's coverage, savings, investment. So term life insurance is what most people are advertised. And in its simplest form, it's what most people think of when they think of life insurance. A big check for someone when you die. But in order to utilize term life insurance for just that, or for a financial concept and plan, you should understand further the benefits. So, term life insurance is a policy for a defined period of time. Most companies offer term policies in 10, 20, and 30-year increments. Once you're age 50, most companies will only allow you a maximum of a 20-year term. Some companies also offer a 5-year term, and some will even offer a 1-year term. Now, all term life insurance is not created equal. There are different features and benefits to term insurance. Firstly, one amazing benefit of term and life insurance is the fact that coverage is often very affordable. It too is also often very easy to apply for, and in many cases won't require things like a medical exam or a long phone exam with a registered nurse. 3, after your term, you may be able to get coverage. 4, in some instances, you can continue your policy, often at a higher cost. And 5, in some instances, you can get your money back from the policy after the term. Now, some downsides to a term policy being inexpensive and easy to get are: 1, there's no protection against a lapse should you ever miss a payment. 2, once the term is over, you no longer have the protection. 3, your circumstances and health may have changed during or after the term, and you may no longer be insurable. 4, in most cases, the money you spent is lost and you get nothing in return. And 5, there is no cash value accumulating or investment growth associated with the policy. There's also term life insurance for one's job, where in most instances it's not portable, meaning when you leave the job, you cannot take the policy with you as one would use COBRA with their healthcare. A few benefits of a term insurance policy from your job is they generally cost substantially less than getting life insurance on your own, and they tend to have much more leniency when it comes to underwriting, which is the insurance company deciding your costs based on risks such as current and past medical history, driving record, and credit score, among a few other factors. Underwriting is involved in all life insurance. Now, digging a bit deeper, you can also have additional features and benefits called riders to adjust provisions of your policies. For specifics on those things, it's best to have a consult with a licensed financial professional. So let's look at some of the mechanics of a life insurance policy. You have premiums. Premiums are the dollars that you pay to the insurance company for the reserve of a much larger payout in the event of the death of the insured. You can also pay for a life insurance policy that is not on your life. Underwriting is the process of the insurance company deciding your insurance coverage, deciding what your insurance coverage will take to determine your final price and coverage. And then the death benefit, or the face amount, is the amount of money decided upon by the insurance company and the insured and agreed upon in the contract to be paid to a beneficiary upon the death of the insured. These words are going to be involved in just about any insurance policy you purchase, even in car and home insurance. So what happens to your term life insurance policy after the term? You actually can keep your policy after the term ends, usually without a medical exam. However, the cost is usually substantially higher than the prior years. Usually, you'll pay for 1 month of coverage, nearly what you paid for the entire year during the term of your original contract. For example, in 2011, you bought a $250,000 10-year term policy for $500 a year, and it ends in 2021. Starting in 2022, you can continue the policy, but the premium may likely be $200 a month instead of $500 a year. Term life insurance also often carries an option called convertibility, which allows you to convert some or all of your term life insurance policy into a whole life insurance policy. The option of converting is only available for a certain period of time during the duration of your term contract. For example, you'll have 10 years to convert a 20-year term into a whole life policy. Now that we have a clear understanding of some of the basics of the difference between the policies, let's go a little further. A big difference is obvious between whole life and term life, and that's the price. The big reason of the difference in price is due to the way the premium is treated. Now, to get a better idea of what premium treatment is, we first have to know what types of treatment of options you get when paying premium. Outside of what everyone is familiar with when exploring premium options, which is paying monthly, quarterly, semi-annually, or annually, term and whole life insurance also have more options when paying the premium. Some relate to both, and some only relate to a whole life policy. So your premium options are level premium, a premium determined at the beginning of the contract, and the price remains the same throughout the life of the contract, both whole and term life. Increasing premium, a premium determined at the beginning of the contract but also made to increase at certain inflection points of the policy, both whole and term life. Decreasing premium, which is discontinued for most companies, is a premium determined at the beginning of the contract scheduled to decrease at certain inflection points in the policy, usually only associated with a term, decreasing face amount, or decreasing death benefit policy. Annually renewable, a premium determined at the beginning of the contract that only lasts 1 year, at which point you can continue the policy at a higher price the next year, only in term insurance. Guaranteed renewable, an option in a term life insurance policy that will allow you to purchase more insurance in the future without having to undergo additional underwriting such as new medical records or a medical exam. Simplified issue, a type of insurance policy that usually requires less underwriting. Most often it may only require a phone exam or a prescription check, both whole and term life insurance. Guaranteed issue is a type of insurance policy that usually requires no medical underwriting, minimal health questions, but does have a limit to eligibility based upon age, usually between 50 and 80, and has a maximum face amount of $25,000. Return of premium, an insurance policy where once the term ends, you get all your premiums paid into the policy back from the insurance company. Term life only. Now, another major difference is the treatment and options available for the death benefit, and we'll address those next. You have a level death benefit, the amount of money agreed upon by the insurance company and the insured, also called the face amount. The level means this amount will remain the same throughout the life of the policy. This is both whole and term life. You have decreasing death benefit, the amount of money agreed upon by the insurance company and the insured. This amount starts at one point and gradually becomes less over the life of a policy. Usually this is used for mortgage protection, as over the course of your mortgage, the need to have a reserve to pay it tends to lower over time. Increasing death benefit, the amount of money agreed upon by the insurance company and the insured. This amount starts at one point and based upon the type of policy you have, grows based upon the premiums paid into the policy and the cash value set aside for accumulating. This is whole life only. We'll address the multiple types of whole life in the future below. You have joint survivor life, a type of policy issued for a death benefit to be paid once the second insured on the policy dies, whole and term life. Juvenile insurance, a type of insurance policy that is on individuals under 18 and tends to convert to a whole life from a term when they become age of majority. Term to permanent, a life insurance policy that starts as a term and automatically increases to a whole life policy in a specific period. Final expense is a small face amount, usually a max of $25,000, a policy that generally issued to anyone who applies as long as they meet certain age requirements, and that is a whole life policy. Now, as comprehensive as this vlog has been, there are still many layers left in this onion to peel back. However, this should give you enough ammunition to have an effective meeting with a financial professional. Thank you for reading, and remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. That's the challenge. Now let's take a look at some of the comments here. So, first one is from another agent, Paul Thompson. It says, Alonzo Hall, you made a good effort on life insurance information, but your term insurance policy's downside is incorrect. So I responded, you're going to have to substantiate your saying of it being incorrect, my friend, but thanks for reading. It says number 2 and 4 are definitely wrong, and 1 and 3 apply to all insurance. Someone else, Sharice, says, number 2 and 4 are definitely not wrong. And then Charles Cook responds and says, well, Number 2, you have conversion options. And number 4, you got exactly what you paid for, protection, so no wasted money. So technically both of those are wrong. Then another representative said, what conversion options does your company offer? Number 4 is considered as a cost of lost opportunities. The best option to have is both term and permanent. That's generally what I think of when I think of buy term and invest the rest. And then he said to the young lady, you see their company's training materials are set that way. They say permanent coverage sucks. He was taking a shot at certain companies. Then he says all conversion options listed in the policy. Charles then says number 4 is a lost opportunity if you took the money and did other financial moves with it. And then I explained to him conversion options on a 20-year term are what? 5, maybe 10 years to convert. And to Oleg, I don't think Charles was bashing permanent. I just think he was stating what he thinks is a flaw in the term. So then Paul Thompson says, well, this phrase, some of the downside to a term policy are being inexpensive and easy to get. He was saying, is inexpensive a downside? Otherwise, you did a great job. I may have mistyped there because that is not a downside. So yeah, he's absolutely right there. Charles Cook, I responded, you're not reading it right. You only have conversion options during the term. And with things like ROP, return of premium, you're still leaving money on the table. My next response was, to all who have commented, thanks for the input. This is what we call iron sharpening iron. Some features, benefits, and flaws, potential or perceived flaws of our industry products. Keep up the input. It only makes us all more knowledgeable and better to service our clients. Then someone else just posted, nice. Someone else posted, what I appreciate about you is that you took the time to do something that contributes to the group. And he put the GIF there. Then Johnny Branscombe said, I believe that insurance wasn't established for people to keep for a lifetime. It is there to protect the income that I can make until I can save enough to become self-insured. A $250,000 policy will cost about $260 a month for a whole life, or about $40 for the term for 30 years. Most families of 4 need at least $500,000 worth of insurance. Life insurance is for the living, not for the dead. Exactly. So then I said I have to disagree. Term insurance was that for just protecting the money. But permanent life insurance was built on the back of the bond market and has tax implications. Also, an average family with a $50,000 income needs 20 years of income replacement, which would be a $1 million policy. And to make true use, one will put the death benefit in a money market account, MMA, which in today's market grows at 0.5% annually, which would require a $10 million policy. That would be $50,000 a year in perpetuity off the interest. I put internet. So that's it for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, you can donate by hitting the Cash App. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance up to $1 million with an instant decision and no medical exam. The links are in the description. With that being said, wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. And remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.
Interested in having an evaluation? Find my contact info in the description and schedule a consult to explore your options. Have a financial question but don't know who to ask? Email me at a.hall@cgwealth.financial and your question may be answered in my next video. Security products are subject to investment risks, including possible loss of principal. Before investing, carefully consider the investment objectives, risks, limitations, charges, and expenses of the product and any underlying investment options. This information can be found in the product and investment option prospectuses. Copies are available from your registered representative.